In today's video, we'll dive into the unique challenges AMC theaters face, the larger trends in the theater industry, and the impact of market manipulation on AMC's stock. Despite exciting developments, including new product lines and a major share in the theater market, AMC continues to struggle. We'll analyze why AMC, a leader in its sector, faces setbacks even as other companies like IMAX and Cinemark see their stocks rise. There are several contributing factors, but market manipulation, naked shorting, and investor sentiment are among the key issues. So let's break down exactly what's happening and how this situation could unfold for AMC. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But everyone, remember, this is not a financial advice video. Starting with a look at the theater industry as a whole, it's clear that theaters are thriving, with IMAX and Cinemark performing well. Despite challenges in recent years, the film industry has managed to generate profits, and both IMAX and Cinemark have posted strong earnings. However, when we look at AMC, the stock paints a very different picture. Even with comparable market share and reach, AMC is seeing its stock drop, while other players benefit from positive investor sentiment and rising prices. For example, IMAX and Cinemark have seen steady gains, while AMC remains in the red. This trend has led some to question why AMC is not experiencing similar growth, especially given its dominant role in the theater market. When we dig into the specifics, AMC holds a significant part of the industry, including a large portion of IMAX screens and a monopoly on Adobe Cinema screens in the US. It also has its own branded line of popcorn and candy, offering unique products that differentiate it from other theater chains. Despite this, AMC's stock price remains low, which seems unusual considering its influence and established revenue streams. This raises the question, if the theater industry is doing well overall, why isn't AMC benefiting? A tweet recently highlighted that AMC's unique products, like its branded popcorn and other offerings, contribute to its identity, making it an attractive investment to many. But despite these perks, the company's stock is trading close to record lows, indicating that the challenges go beyond mere earnings reports. Investors may look at these numbers and think AMC should be performing on par with its competitors, but that's not what we're seeing. The issue here goes deeper than just financials. A major reason for AMC's struggles lies in the psychological impact of stock manipulation. When the public sees companies like IMAX and Cinemark achieving positive results and rising stock prices, it can lead them to favor these safer options without taking a closer look at AMC. Without thorough research, investors might assume that AMC is underperforming for fundamental reasons rather than understanding the role that stock manipulation and shorting play in its declining price. This is why, for those invested in AMC, conducting due diligence is essential. Otherwise, it's easy to misunderstand the factors keeping AMC's stock down. Stock manipulation tactics like naked shorting and spoofing have long affected AMC's value. For AMC to break free from this, it would need a significant catalyst to drive substantial retail interest in purchasing, which could overpower the current downward pressure on the stock. Initiatives like introducing new beverages, promoting unique theater experiences, or potentially launching a platform to attract new audiences could act as incentives for retail investors. These are steps AMC might consider to encourage renewed interest and offset the manipulation that keeps its stock price low. AMC's challenges aren't purely financial or technical. There's a strong psychological element involved as well. The ongoing price suppression is designed to discourage potential investors from looking into AMC. New investors who are unfamiliar with the nuances of the industry may quickly dismiss AMC based solely on its lower stock performance. This is where the psychological impact is strongest. Short sellers want to deter people from investing in AMC and instead attract them to competitors who are showing gains, even if those gains aren't necessarily tied to better fundamentals. The use of algorithms and advanced trading strategies plays a crucial role in this manipulation. When AMC does release positive earnings or encouraging data, there's often an immediate counteraction by these trading mechanisms, which dampen the price gains. This manipulation is not only technical but psychological, aiming to create doubt among retail investors. For instance, short sellers continue their efforts because they know that every day that passes without an uptrend reinforces the negative perception of AMC's stock. However, those who have done their research know the truth about AMC's business fundamentals and recognize that the manipulation won't last forever. In terms of liquidity, a recent tweet noted that the reverse repo market, which provides liquidity to financial institutions, has dropped by 34% over the past 60 days. The lower reverse repo levels limit the cash available to major financial players, adding stress to the system. This liquidity drop may seem unrelated to AMC, but it has significant implications. Institutions that lend to short sellers rely on this liquidity, so a decrease in available funds may eventually restrict their ability to sustain these short positions on AMC. The decrease in liquidity means fewer resources for hedge funds and other major players who engage in short selling, which could eventually relieve some of the downward pressure on AMC. The lack of available liquidity in the market doesn't just affect AMC, it's indicative of a larger economic issue. The Federal Reserve's Treasury bond issuance has also been met with less demand, indicating hesitancy from other countries to invest in U.S. bonds. This situation could create additional volatility in the market as a whole. If there's a general financial downturn, those holding large positions against AMC could find themselves squeezed as access to capital tightens. Thus, while the stock may remain under pressure for now, a larger market downturn could shift the balance. Reports have shown that U.S. banks currently hold around $750 billion in losses on real estate-related assets. This staggering figure reflects significant weaknesses in the banking sector, which again may indirectly impact AMC. Financial institutions that support short sellers in the theater industry may soon face liquidity challenges, reducing their ability to sustain short positions against companies like AMC. If the banking sector tightens, short sellers may lose the backing they need to keep the pressure on AMC, potentially opening up the stock for a recovery. The real estate losses only add to existing issues, as banks also have considerable positions in derivatives. When combined with rising mortgage rates, which recently hit over 7%, the economic picture becomes increasingly complex. Mortgage rates approaching double digits will likely impact the housing market and could eventually lead to broader financial instability, similar to what we saw in 2008. In this case, the repercussions could be even more severe. The broader economic consequences could indirectly benefit AMC by disrupting the manipulation tactics that rely heavily on available liquidity. The SEC's recent admission regarding unapproved and unbacked financial products being traded on major exchanges further reveals the extent of the regulatory gaps that allow manipulation to persist. This revelation has raised questions about how these practices have been overlooked for so long, and highlights the lack of oversight that has harmed retail investors. Although the SEC has acknowledged these issues, action remains slow, allowing manipulation tactics to continue unabated. These issues point to a critical need for transparency and reform in the financial markets. Although AMC is currently under pressure, the situation also highlights a potential turning point. When regulatory bodies and the market finally address these manipulative practices, AMC's stock could see a rebound. Until then, it's essential for investors to stay informed and not be swayed by surface-level stock performance alone. To sum up, AMC's current struggles are not a reflection of its business performance, but rather the result of complex external pressures. Between market manipulation, liquidity challenges, and a looming economic downturn, AMC faces considerable headwinds. However, those who understand the full context know that these challenges could ultimately be temporary. By staying aware of the larger financial picture and resisting the psychological tactics used by short sellers, investors can make more informed decisions. AMC's unique position in the theater industry, coupled with its innovative products, make it a valuable player despite its stock performance. While it's easy to get discouraged by the manipulation at play, understanding these dynamics sheds light on the true value of AMC and why it remains a compelling story in the world of stocks and investing. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.